Hey guys, I hope you are doing well and that you are all staying safe and well. Most people's mortgage is probably their most expensive monthly payment. Nobody likes paying payments, yet each one is a check written to ensure your future. After all, a house is more than just a house. It's an investment that, when done correctly, may help you and your family save for retirement, significant costs, or even debt repayment. It's common knowledge that when you borrow money, you'll have to pay interest. When it comes to home purchases, you might not understand how much interest you'll have to pay. Assume you've been accepted for a 300,000 30-year mortgage at 4% interest. If you pay your monthly payment on time, you'll pay a total of 215 $1,609 in interest over the course of the loan. That's almost as much as the balance of your loan. Although it may appear frightening at first, we have a secret. Did you know you may save money on your mortgage interest? That is correct. So in today's video, we'll go through the top 10 ways to save lots of money on mortgage interest. Let's begin. Biweekly mortgage payments. Each year, making a payment every 2 weeks adds one all-principal payment to your mortgage. The biweekly payment plan requires one payment every 2 weeks, for a total of 13 payments each year. Your extra payment is allocated to your principal each year, so as your principal decreases, your interest falls as well. In addition, the faster you pay down your principal, the faster you will develop equity in your home. The traditional wisdom holds that making payments more frequently prevents interest from occurring, which can result in years being removed from your loan over a 30 or a 15-year period. Just make sure your mortgage servicer accepts biweekly payments and doesn't charge you any extra costs for doing so. These fees might mount up, leaving you with little to no benefit. In the same vein, find out whether your biweekly payment is applied immediately or is held up till the end of the month. The real advantage of biweekly payments is that the money is applied right away. Extra mortgage payments. Even if you don't set up a biweekly plan with your servicer, you can save money on interest by making one extra mortgage payment a year on your own, or by dividing your monthly payment by 12 and adding that amount to your payment every month. Either choice can help you pay down your debt more quickly, potentially saving you hundreds of dollars in interest. The first option allows you to decide whether and when you want to make extra payments on your mortgage debt. If you get a big tax refund or a big performance bonus at work, it could be a good idea to put part of it towards your loan principal. Depending on how much you can spend, you can save a lot of money while paying off your loan in years of interest payments. The second alternative, increasing your monthly payment, can also recruit in significant savings. Consider the following scenario. Let's say your initial loan was for $400,000. You've agreed to traditional 30-year loan with a 4% interest rate, 4.41% APR. Without escrow, your money payment is usually $1,910. However, if you can contribute an extra $100 to your monthly payment, you might save a total of $29,801. This would allow you to pay off your loan in 2 years and 8 months instead of 2 years and 8 months. Remove private mortgage insurance from the equation. If you purchased your home with a traditional loan but did not put down 20% of the purchase price, you almost certainly had to pay PMI. It may not have seemed like a huge deal at the time because it allowed you to get into your ideal home with a lower down payment. However, now that you've had your mortgage for a few weeks, the cost may be increasing. The good news is as follows. When your mortgage balance falls below 80%, the home's appraised value, you can ask your lender to terminate the insurance. This can happen if the value of your house has increased or if you have paid off some of the principal. You'll need an appraisal to certify your home's value, but once that's done and the appraiser has confirmed you match the criteria, you're free of PMI. Refinance your loans. When you pay down a major chunk of your house loan and opt to recast your existing loan, this is known as recasting. You're changing the way people pay off their mortgages. In contrast to a standard mortgage refinance, this entails a new loan term, length, but not a new loan or loan type. Your monthly principal and interest payments are adjusted, resulting in a lower monthly payment throughout the loan's current term. Make refinancing easier. You should consider a streamlined refinance if you have a government backed loan. With a streamlined refinance, you can benefit from a lower interest rate and monthly repayment. Furthermore, some lenders will work with you to reduce your interest rate without resetting your term. Custom financing alternatives are available at American Financing, for example, and can be structured into 8, 14, or 19-year periods, depending on your needs. Because you should be able to refinance to a 24-year loan if you've been paying for 6 years. It's straightforward. It's a simple approach to save money that's tailored to your needs. A rate and term mortgage refinance is a similar choice if you have a conventional loan. You have the option of changing your mortgage rate, loan length, or both. You'll probably get a lower, more competitive interest rate because you're not cashing out. And as previously noted, when you work with American Financing, you'll be given personalized financing alternatives that don't reset your loan terms. It's your time, so do it your way. Make good use of the equity in your home. Your house is a lot more than just a house. It's a prudent investment that can help you save money on monthly payments, pay off debt faster and a bit better rate, and safeguard your financial future. While paying off your house quickly may be appealing to some, it may not be the greatest option if you have high interest credit card debt. According to Insert Name, a personal loan expert at NLC Loans, high interest credit card debt costs a lot more to pay off per dollar than a house. So, if you're 15 grand in debt, making more home payments isn't really a good idea. You'll wind up spending a lot more on your debt over time if you pay a higher interest rate on it than you do on a mortgage. The idea is to use your home's equity to pay down your debt faster and with less interest. For people who are in debt, a cash out refinance is a fantastic choice. With a cash out, you'll refinance your mortgage and receive a cash payment for the majority of your home's equity. You can then put that money towards paying off your credit cards and rolling them into your mortgage payment, which will have a reduced interest rate. It will also save you time by allowing you to make one monthly payment, and it may even help you improve your credit score if you had a lot of debt on those cards. In many circumstances, cashing out your equity and refinancing your mortgage can lower your monthly payments. Additionally, it may allow you to get a shorter term on your mortgage and pay it off sooner, which is beneficial once you're debt free. Think about getting an ARM. Considering moving an adjustable rate mortgage, if you presently have a fixed rate mortgage but do not plan to stay in your house for more than 5 years, for the first 5 years, ARMs will offer you a cheap rate, but after that, the rate will fluctuate and will reflect the prime rate. If interest rates are currently low and you know you'll be house hunting in 5 years or fewer, an ARM may be a good fit. This could result in monthly saving of hundreds of dollars on your mortgage. This technique is a little riskier if you plan on staying in your house for more than 5 years. While rates may be low now, they may not be so in 5 years. So, even if you refinance to another fixed rate loan, you may end up with a higher interest rate. Boost your credit score. In the mortgage market, this is also a cliche, but it is very true and useful recommendation. It's no secret that folks with higher credit scores have cheaper interest rates available to them. So, if you're not doing everything you can to improve your credit score, you're doing yourself a disservice. If your credit isn't where it should be, take the time to improve it. In general, a FICO score of 760 or more is enough to get the best mortgage rates, at least when it comes to your credit score. If you want to save money on your mortgage, you should aim for a score of at least 760. Submit your application at the end of the year. After doing some research, we noticed that mortgage rates are typically lowest in the fall, particularly in December. For mortgage lenders, this is normally a quiet time of the year, and when they aren't as busy, they may decrease their rates to attract new business. So, if you apply in the last few months of the year, you could be able to save 125% or 25% of your mortgage rate. This isn't always the case, but it's worth thinking about. It's really advantageous for other reasons aside from the possibility of a lower rate. Things could be quieter, which means you might get a more attentive broker/loan officer and a smoother loan procedure that moves along faster. Accounts that are offset. An offset account is a terrific method to save money while lowering your mortgage interest rate. When interest is computed, the balance of your offset account is removed from the amount borrowed, so that as your offset balance grows, you may pay less interest. Important points to remember. Keep in mind that interest is calculated based on the amount you owe. You pay less interest if you pay down your principal sooner. Refinancing isn't for everyone, even if it can be a good way to save money. Before making any big loan adjustments, make sure you ask yourself a few questions about what you want to achieve. Working with mortgage specialists gives you access to all available options. You won't be pushed into a loan program that isn't right for you. So that's it for today's video. Please watch our playlist where I explain everything about finance related topics. Friends, do not forget to like, share, subscribe to the channel, and press the bell icon and click notification all for more amazing videos. And do leave a comment in the comment section below. I'll be back with some more mind-blowing contents in the next video. Till then, bye.